In late 2024, President-elect Donald Trump sent shockwaves through global markets with a bold threat: a sweeping 100% tariff on all BRICS imports if the bloc moves forward with plans for a rival currency to the US dollar. The announcement, coming at a time of already heightened economic uncertainty, immediately triggered volatility on Wall Street and raised alarms in financial capitals around the world. This move, revealed on Trump's Truth Social account, represents one of the most aggressive protectionist stances in modern US history. It signals a willingness to upend decades of global trade policy in order to defend the dollar's dominance and American economic interests. Trump's message was blunt and uncompromising: abandon the new currency plan or face the loss of access to the vast American consumer market. The threat was clear: economic consequences would be swift and severe for any nation that challenged the dollar's supremacy. The BRICS nations, led by a defiant Russia, fired back almost immediately. They argued that such threats would only accelerate the world's move away from the dollar, and accused the US of bullying and economic intimidation. The standoff quickly became a test of global resolve. The confrontation exposes deep and widening geopolitical rifts, with each side accusing the other of economic coercion and manipulation. Tensions at international summits have reached new heights, as leaders debate the future of the global financial system. For ordinary Americans, the stakes are high. Tariffs could mean higher prices on everyday goods, disrupted supply chains, and the real possibility of retaliation against US exports. The uncertainty is already being felt in stores and factories across the country. Trump frames this dramatic move as a necessary defense of American jobs and national sovereignty, but critics warn it could spark inflation, damage key industries, and provoke a global backlash that harms US interests in the long run. The future of the dollar and America's economic leadership now hangs in the balance, with the world's financial system facing a period of profound uncertainty and potential upheaval. As the world watches, a new era of economic conflict and competition is beginning, one that could reshape the global order for years to come. BRICS began as a loose coalition of Brazil, Russia, India, China, and South Africa, emerging economies seeking a bigger global role. Initially, their collaboration was limited to economic dialogue and annual summits, but the seeds of ambition were always present. Over time, these nations recognized their shared interests and the potential power of acting together on the world stage. In recent years, BRICS has transformed into a formidable geopolitical force, aiming to create a multipolar world and challenge US dominance. Their cooperation now extends beyond economics, touching on technology, security, and global governance. Their boldest move, developing a new reserve currency, tentatively called the unit, to bypass the dollar in trade and finance, signals a dramatic shift in global monetary policy. This initiative is not just about currency, but about asserting independence and reshaping the rules of international commerce. The plan, discussed at the 2024 Kazan Summit, is designed to shield members from US sanctions and reduce dollar dependency. Leaders debated the technical and political challenges, but the shared resolve was clear. The bloc has expanded, adding Iran, UAE, Ethiopia, Egypt, and Indonesia, boosting its economic and demographic clout. This enlargement marks a new era for BRICS, making it more representative of the global South. Together, these 10 nations now control a significant share of global GDP, population, and energy resources. Their combined influence is reshaping the balance of power in international markets. For Russia and Iran, the new currency is a lifeline against sanctions, offering a way to conduct trade without fear of Western restrictions. For China, it's a strategic play to elevate the yuan and increase its leverage in global finance, furthering its long-term ambitions. Brazil and South Africa see it as a path to greater monetary independence, hoping to insulate their economies from external shocks and currency volatility. While a common currency faces hurdles, ranging from technical integration to political trust, the shared commitment signals a direct challenge to the post-$1-2 order and the institutions that support it. The world's financial architecture is shifting, and BRICS is at the center of the storm, driving conversations about the future of money and power. The stakes for the global economy have never been higher, as nations and markets watch closely to see if this bold vision can truly reshape the world order. China and Russia are the driving force behind the BRICS currency push, united in their desire to end US financial dominance. For Russia, Western sanctions after the Ukraine invasion made de-dollarization a matter of survival. Moscow now champions a BRICS financial system as a shield against future sanctions. China, the world's second-largest economy, sees dollar dominance as a constraint on its ambitions and a vulnerability in its rivalry with the US. By promoting a BRICS currency, Beijing aims to internationalize the yuan and expand its influence across the global south. The synergy between Russia's urgency and China's long-term strategy is propelling the project forward. While India and Brazil are cautious, Moscow and Beijing's political will and resources are transforming BRICS into a real challenger to the global economic order. The outcome could redefine the balance of power in international finance. The dollar's future is now in question. BRICS's recent expansion signals its rising influence. In 2024 and 2025, Iran, UAE, Ethiopia, Egypt and Indonesia joined, making BRICS a 10-member powerhouse. This diverse group now spans Africa, the Middle East, Asia and South America, giving it unprecedented reach. Over 30 more countries have expressed interest in joining, drawn by the promise of a non-Western alternative to the IMF and World Bank. New members bring vital assets: oil producers like Iran and UAE, Egypt's Suez Canal, Ethiopia's population, and Indonesia's economic heft. The bloc now wields major influence over energy markets and trade routes, but diversity brings challenges. Aligning interests among democracies, autocracies, exporters, and importers won't be easy. Whether BRICS can function as a cohesive unit will determine the fate of its ambitious currency project. De-dollarization is at the heart of the BRICS agenda. For decades, the dollar's dominance has given the US unmatched economic leverage, especially through sanctions. Countries targeted by US sanctions like Russia and Iran are eager to escape this vulnerability. By trading in their own currencies or a new BRICS currency, members hope to bypass US control and assert economic sovereignty. The Petrodollar system, which keeps global demand for dollars high, is eroding as more oil trades shift to other currencies. By 2023, about 20% of global oil trades were already outside the dollar. BRICS, now home to major oil producers and consumers, is accelerating this trend. For the US, a declining dollar could mean higher import prices, inflation, and rising borrowing costs. While the dollar remains dominant, BRICS's coordinated push is the most serious challenge yet. The global financial landscape is on the verge of a paradigm shift. BRICS is exploring bold new financial tools to rival the dollar. One idea, a new currency partially backed by gold, offering stability and credibility, but a full common currency is a long-term goal. In the short term, BRICS is building a digital payment system, BRICS Bridge, using blockchain to connect members' financial systems and bypass Western-controlled networks like SWIFT. Projects like M-Bridge, involving China and the UAE, have already proven the technology's viability for cross-border transactions. This digital infrastructure is a crucial step toward de-dollarization, enabling real trade outside the dollar system. BRICS's two-pronged approach, digital payments now, a reserve currency later, makes its challenge to the dollar both practical and visionary. The world's financial rails are being rebuilt in real time. Despite momentum, BRICS faces major internal obstacles to a common currency. The bloc's members are economically and politically diverse, making consensus difficult. A single monetary policy would affect each nation differently. What helps China could hurt Ethiopia. Some, like India and South Africa, prefer boosting trade in national currencies over a shared currency. Deep institutional integration, like a common central bank, is still a distant goal. Recent BRICS statements prioritize digital payment systems over a full currency union. The dream of a BRICS currency is alive, but the path is slow and uncertain. The world stands at a crossroads. Will the US dollar remain supreme, or will BRICS succeed in building a rival system that challenges the status quo? The choices made now could reshape the global economy for generations to come, affecting not just governments and corporations, but the daily lives of billions. In one possible future, BRICS's internal divisions and persistent US pressure stall the project, leaving the dollar dominant but slightly weakened. The world continues to rely on the dollar for trade and reserves, but with growing doubts about its long-term stability. In another scenario, BRICS overcomes its differences, launches a new shared currency, and begins to shift global power away from Washington. This would mark a dramatic turning point as countries seek alternatives to the dollar and new alliances form. For Americans, this could mean a weaker dollar and higher prices for imported goods. For the world, it could signal the rise of a more multipolar order, with no single country calling all the shots. The most likely outcome, though, is a fragmented system: dollar, euro, yuan, and a BRICS currency all sharing the stage. Global finance could become more complex with multiple centers of influence and competition. This transition will be turbulent, marked by trade disputes, shifting alliances, and uncertainty as countries adapt to new realities. Trump's tariffs and the BRICS currency push are just the opening moves in a new era of economic rivalry, where every decision could tip the balance of power. The next few years will be critical, as leaders and institutions navigate uncharted territory and determine the shape of global finance for decades to come. The stakes are enormous, for nations, businesses, and ordinary people everywhere. Every shift in currency or policy will ripple through economies and households around the globe. The world is watching as history unfolds, waiting to see which path the future will take.